everyone. Welcome to this week's weekly market view for Monday, the 13th of May 2024 to Friday, the 17th of May 2024. My name is Vishal. Let's get started. All right, so let's start with the Nifty monthly chart like we always do. And if you can see right now, I have also opened a 3-month chart of the Nifty as well as the 6-month chart of the Nifty. And the reason why I'm looking at these slightly big time frames is also because of the fact that this month and next month there's going to be a lot of volatility. Obviously, next month are going to be um, the election results, and volatility has already picked up in this market. So it's also good sometimes to just go back a little bit to your higher time frames and see where the price is. All right, so we'll just do quickly a marking of the zones on the higher time frames first. So let's start off with the half yearly chart and we will just mark our levels of demand. So this is our closest level of demand from current market price, rally base rally. And this is close to around 17,500 to 15,185. If we look at the quarterly chart and if we look at the closest level of demand on the quarterly chart, more or less we can just fine tune this level a little bit more better in on the quarterly chart. So this is your level on the quarterly 18,200, and then maybe we can just fine tune this a little bit over here. Yeah, there you go. 18,200 to 16,886. So these are your bigger time frame levels or higher time frame levels. And now let's go into the monthly chart. So on the monthly chart, we are seeing a little bit of consolidation and a little bit of weakness. However, if you look at the weekly chart now, market is consolidating. It is range bound. There is no clear direction here. But I'm just going to draw a zone over here, and you can see this gap. And maybe when volatility picks up, there is a possibility that we might tend to fill this gap over here. Okay, so just keep a close watch on this level. This is that level, 21,420 to 21,141 on the weekly chart. If we go on to the daily chart, this is pretty much that level of demand, right? So we got to keep a close watch on this level. This seems to be a good level. And also you can see that we also have some open interest lining up with this level of demand, giving us a slightly added confidence that this level can act as a strong support. Right now, you can see prices are somewhere in the middle. And if you look at the supply zone right now, the closest supply zone from current market price is this area over here from where the markets have actually originated the fall, 22,563 to 22,801 on the Nifty. And here also you can see that along with the supply zone, there is this 22,500 call open interest also nicely confluencing with the supply zone. So this becomes a little bit of an handy information if pretty much you are a trader who is wanting to probably hold a position for maybe a couple of days or a couple of weeks. Let's move on to the next index. We're going to have a look at Nifty Bank here. Let's have a look at Nifty Bank. So again, let's start off with the higher time frame first. So on the higher time frame on the half yearly chart, this is our closest level of demand. Let's go ahead and mark this level over here. And then on the quarterly chart or the 3-monthly chart, we have this rally base rally level of demand. So you can clearly see that the higher time frame level of demand is still holding on all the indices, and probably what we are seeing right now is more or less a correction. If you look at the monthly chart, again, markets are just consolidating. If we look at the weekly, the week has started, it started on a negative note, but now you can see that it's trying to, the start of the week is trying to, begin with a positive note now. You can see this strong green candle here. And we do have this level of weekly demand to which price is actually respecting right now, which is 47,101 to 45,929. If we go on to the daily chart of the Bank Nifty, we have this tested area. And here you can see that today price did go all the way down to 47,000 odd levels. This is where the highest put open interest was. And prices have given a strong bounce from this level. So this is indicating that in the short term, it's not going to be easy for 47,000 to break to the downside. and 47,000 is acting as an immediate support for the market. On the upside, we have 48,000 and 49,000. These are going to be two resistance levels to watch out for on Bank Nifty. The supply zones on Bank Nifty, right now we are seeing this supply zone, which is 49,163 to 50,000. And you also have 49,000 call open interest lining up with this supply zone, giving us a little bit of a more added conviction that this could probably be the range for the market before, eventually the results come out. All right, now let's move on to Nifty Financial Services. So let's look at Nifty FinServ. Let's add the graph here. So we'll just wait for the graphs to load. And now we have the half yearly chart on Nifty Financial Services. And here you can see that this is your closest level of demand, which is holding. And then you also have a level of demand on a quarterly chart, which is this rally-based rally. Again, this level is also holding. And then if you go on to the monthly chart, then this level is your quarterly level of demand. But then just above that, you also have another level of demand, which is this rally or this drop-based rally, to which the market has again retested and moved to the upside. So what we are seeing right now is maybe another consolidation. We don't know whether this is going to be another rally base or a drop in price, or this could also eventually turn out to be a rally based rally. So it'll be interesting to see how this monthly candle closes. On the weekly time frame, today we are seeing a bounce coming in after the markets opened low. And on the daily chart, let's take this out. Yeah. So on the daily chart, 21,000 is acting as an immediate support for the market. And to the upside, we have this area of supply over here, which is also coinciding with the open interest levels, right? So 21,800 to 22,000, these are going to be stiff resistances for the market. And I believe so that by the time the results or the news is out, there's a possibility that the markets might tend to remain in a sideways range or in a consolidated range between the supply zone and the demand zone on the Fin Nifty. Let's move on to the mid cap Nifty now. So we'll go to Nifty mid cap. So mid select. All right. So now let's start off with the half yearly chart. Okay. So nothing much to say about the half yearly chart since this is a new index. Everything is up right now on the quarterly and the half yearly chart. The quarterly level of demand is right at the bottom over here. There's no nearby level of demand. But if you go on to the monthly chart, the closest level of demand on the monthly chart is this rally-based rally. 9216 to 8479. Of course, market is very, very far away, but it's good to know these levels, especially when big news is coming out. If you look at the weekly chart, we have this this level of demand, which is actually a reaction to this level of demand. So this is actually the original level of demand, and then prices have bounced and then moved up. But again, there's a possibility that this level of demand can still hold and the prices can still start moving to the upside. If we move on to the daily chart now, and now what is interesting to see is that the market today made a low of 10,761. And from there on, the mid-cap index has bounced and given a very, very strong bounce. So as compared to the Nifty and the Bank Nifty and let's say the Fin Nifty, where there are, supply zones on the chart, the mid-cap Nifty is still hovering around this area. As you can see over here, it has, just made an all-time high. And now it's moving back into this area from where it has made an all-time high. So what we might tend to see is first that we might see that even after this very strong move to the upside, there might be some profit booking coming around these resistance levels, that is 11,050, 11,100, and 11,125. There are nearly 3 levels that are confluencing with this supply zone. So I sense that it's not going to be a very easy task for the mid cap Nifty to break this supply zone and move to the upside, but we don't know because markets are always tricky. So let us see in the coming days or probably in this coming week whether that happens or whether market takes a stiff resistance of this area over here and then again market starts to turn to the downside. All right, let's now move from the world of indices to the world of currencies. So let's go and check USD INR here. And I'm going to load the USD INR chart. We'll do an analysis from the higher time frames to the lower time frames. So let's first start. Let me remove all the tools here. So we do our analysis absolutely fresh. So here now the half yearly chart, you can clearly see that the closest level of demand from current market price is right here. Rally base rally 76.35 to 72.30. And now we are interestingly seeing that this rally based rally is also forming, right? So it's not yet completely formed, but it's about to form. And it'll be interesting to see if the current half yearly candle closes green. Right? So we can see that on the monthly chart. And on the monthly chart, we are seeing the closest level of demand being this area here, rally based rally. And after that, the market has just consolidated away. So 80 is also a round number to watch out for. This is on your monthly. On the weekly chart, we saw a move to the downside. Then we saw a strong move to the upside. So this again is your weekly level of demand. But since the past few weeks, market has just been consolidating in this area here. Let's go on to the daily chart and let us see if we can get some perspective on the daily chart. So if you look at the OI levels, that is the open interest levels, they are very, very far away. And the closest open interest level is 80 to 63, but we do not see any level of demand coinciding unless and until we mark this tested level of demand. So it's quite interesting to see that although this demand has been tested once, and because there is an open interest within this demand zone, there is a possibility that this demand zone can be retested, right? So we'll have to keep a close watch. And if you look at the open interest levels on the higher side, we have 84.50 to 85.25. So there is a possibility that if the indices decide to correct and correct strongly, then there is a possibility of the USD INR spiking towards 84.50 and 85.25 levels eventually. All right, now from the world of indices, we are going to go into the heavyweights. So let's start off first with Reliance and let us see what is Reliance up to today. So we have been tracking Reliance for quite some time right now, and let's wait for the charts to load first. All right, so if you look at the half yearly chart, there's nothing much to say. It has just gone up. There is no level of demand on the half yearly chart. But if you look at the quarterly chart, we have this rally base, rally level of demand. And for quite some time, this level has been holding, right? And the market has pushed significantly to the upside. So now there is some profit booking that we see that is coming. However, if you look at the monthly chart, the closest level of demand on the monthly is this area over here, right? So this is a tested area, but if you look at the origin from where actually the markets or from where Reliance is actually bouncing is actually this area over here. Who knows? If Reliance does decide to correct because of whatever the news or anything of that sort, we might see these levels once again. So it's always good to keep a track of all these higher time frame levels, of course. And before Reliance does that, we'll have to see how these levels are actually holding. So we have this one level over here, which is this rally based rally. And then just below that, there is another level of demand. Yeah, this one. Right. Let's move on to the daily chart. And let's see what our open interest levels are telling us on the daily chart. So on the daily chart, we have this level of demand, rally base rally. Then you have another level of demand, which is this drop base rally. And what are we seeing is that we are seeing a confluence of open interest levels around this area here. So whenever the market is trading close to these open interest levels, and especially the put open interest levels, it's not a good idea to go or, to have a bearish view on such stocks. In fact, there is a possibility that markets will give a bounce and eventually bounce and give a strong bounce. So now where do we see Reliance going on from here, at least based on what the data is telling us? So Reliance now from 2800 levels, it can range right up to 2900 as the first immediate resistance point. And then from there on, if it still tends to push to the upside, then we can see another level, which is 3000. So 2800 and 3000 are the levels to watch out for. In case if 2800 breaks convincingly to the downside, 2700 is still going to be acting as a strong support. And also for the fact that it is also coinciding with a daily level of demand. All right, let's now move on to HDFC Bank. Okay, so we have been tracking HDFC Bank. I'm going to remove all the tools here just to show you what's happening. So let's start off first with the half yearly chart. And if you look at the half yearly chart, we have this not so good structure looking candle here, but still it's a level of demand, and that's why you see price came close to the proximal line and then has been bouncing. But after that, HDFC Bank has just been consolidating, as clearly seen on the half yearly chart. If you look at the quarterly chart, we are in a quarterly level of demand. May not be a very high quality level of demand, but still it's a quarterly level of demand because there is a much better level of demand situated below on HDFC Bank. It's going to be a very rare case if price does break all these levels and comes towards this level because of news or because of the elections and so on and so forth. But 1155 to 993 looks like a good long-term level to look at HDFC Bank. If we look at the monthly chart, on the monthly chart also, we are seeing this level of demand holding. And, every time when we have been talking about this stock, we have always been saying that now, since the stock is in a monthly level of demand, it is going to see some kind of a move to the upside, right? We don't know when that move is going to come, but eventually it is likely to come. And probably what we are seeing now is that in spite of the market consolidating over here and moving strongly here, so this has been a little bit of a pullback. Now, what is going to be interesting to see is from here on, since the market has come into a weekly level of demand, how much further HDFC Bank can move to the upside, right? So we are seeing a little bit of a profit booking coming over here, but I do believe that in case if everything holds good for the Nifty, for the overall index, then sooner or later we should be able to see 1665 to 1790 on HDFC. Last but not the least, let's have a quick look at Infosys, because that has also been on the radar. So we look at Reliance, we look at HDFC Bank, and now we look at Infosys. So let's quickly have a look at Infosys with the big picture, and then we'll move on to. All right, so on the half yearly chart, it's quite an interesting scenario because Infosys is just consolidating over here. The closest level of demand on the half yearly is very, very far away from price. It's closer to 848 to 514 levels. And this is nearly during pandemic time. So we don't expect Infosys to fall all the way down till those levels, but we don't know. Anything can happen because election is considered to be a very, very big event. Let's look at the monthly chart, and on the monthly chart, we are in this monthly level of demand, and since we have got there, Infosys is consolidating, or we can say institutions are trying to accumulate this guy here and trying to push price to the upside, but we still do not have a very, very clear indication yet. If we go on to the weekly chart, price came into this weekly level of demand, and now this weekly level of demand drop-based rally is actually holding. And like I said, that any institution or institutions, whenever they want to start accumulating, they're not going to start buying everything all at once, right? So they will buy, and market will move up, the price will come down again, market will move up, and then eventually what we are expecting to see is a big move to come. So in case if this big move comes after all this consolidation or all this accumulation here, then we might see Infosys moving back again towards these levels, right? So right now, Infosys is very, very interestingly placed, and we need to keep a close watch on this. Again, based on the weekly chart, I would refrain from shorting Infosys right now. So if there is any opportunity, we should focus more on longs than shorts, right? And if you look at the open interest levels also, we are closer to the put open interest level. So again, that's another indication that we should not be going short on Infosys, at least in the the short to mid term, right? In case if Infosys does give us a bounce, these are going to be our first few targets: 1440, 1460, 1500, and then if Infosys is able to surpass all that, then there is this gap area over here, which is this drop-based drop, which is 1543 to 1570. So this is the area that I'm going to be closely watching for in case if markets or in case if Infosys moves very, very strongly. 1543 to 1579 could be a profit booking zone for Infosys. All right, everyone. So I hope you enjoyed the analysis for this week. We have combined our analysis now and brought the open interest element into our analysis. So if you do like our channel, hit the subscription button and become a part of the Sher Khan Education channel. And if you do like our videos, please mention in the comments section what you like, and definitely we will keep on improving the delivery of these weekly videos on a regular basis. Thank you so much, everyone. Have a safe trading week. Enjoy your week, and see you all next week. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.